everything that you need to know about the markets as they stand right now. We will specifically talk about the companies that are in the fray to distribute vaccines, and in fact we will also take your queries live on social media starting 11:20. But for now, let's take a check on how the markets are faring right now. If they were in doldrums yesterday on account of COVID-19, today there is a bit of recovery that was seen early in the session. Some of the gains from the morning have been erased. So as of now, the benchmark indices gaining about 0.6% each, but the market breadth is looking quite strong, and that's positive. In fact, 40 out of the 50 components of the Nifty 50 currently in the green, and quite a few of the names that were battered in trade yesterday are actually gaining ground. The Bajaj twins, for example, are each gaining over 4%, looking very, very strong in trade as of now. Some of those banking names that were trounced in the session yesterday are gaining ground as well. Dr. Reddy's Laboratories, of course, gaining about 3.5%. It is one of the two companies that we will be talking about today. It is, in fact, gaining on the back of the expansion of the vaccination drive that was announced last evening. That is seen as a huge positive. It could prove to be a fillip in the fight against COVID-19 if, in fact, supplies are ramped up of vaccines, and if the states manage to give out those vaccines in a very, very quick manner starting the 1st of May. All told, it's looking quite decent. You have all the sectoral indices barring the Nifty IT that are in.
All right, Alex, that's how the market setup is looking like. Pretty positive today on back of the big headline news that came last evening, and that is the government will be opening up vaccinations for all above the age of 18 years from 1st of May. On back of that, a lot of other players also, apart from Dr. Reddy's and Kerala, there are other players also buzzing. But let me take you through specific stocks that are buzzing in trade. And ACC is first stock that is seeing a sharp up move on back of their Q1 earnings, as well as brokerages have gone ahead and raised their target. You have Jefferies that's maintained a buy stance on ACC. They've raised their target to 2300 from 2200. You have Goldman Sachs also raising the target as well, along with Morgan Stanley. So all on all, ACC is gaining on back of strong earnings as well as strong positive brokerage reports as well. ICICI Prudential, that's another counter that came out with their Q4 earnings yesterday. Upbeat numbers coming in. That is, their value of new business rose by about 25.7% on a year-on-year basis. Post this, you have brokerages that have gone ahead and upped their price target for ICICI Prudential as well. Aditya Birla Capital, another stock that is in focus. That is because Aditya Birla Sun Life AMC, their unit has filed the DRHP with SEBI for an IPO. So on back of that, you have Aditya Birla Capital that is buzzing in trade. And like I mentioned, government going ahead and opening up the vaccinations for all for above the age of 18 years from May 1st. On back of that, you have hospital operators that are buzzing in trade, be it Apollo Hospitals, Wockhardt, all of them are buzzing in trade. You have Cadila that's also buzzing in trade because they are also vaccination is in line. They're going ahead for the regulatory approval. They're hoping that they will be able to launch it by June. And lastly, Dr. Reddy's, that's the one that is in focus today as well, and that is also buzzing on back of the government move. But talking about Dr. Reddy's, a top stock today, and the one that we are going to talk about buy now, sell now in India, has opened up vaccinations for all. And we had Dr. G.V. Prasad of Dr. Reddy's, who is the MD of Dr. Reddy's, in conversation about the process of vaccine production, as well as the time restraint that comes in with the move to vaccinate everyone from May 1st. This conversation he had with the managing editor, Nikush Dalmia. Listen in.
See, as you know, the process of manufacturing biopharmaceuticals is very complex. So it's not like you can switch on manufacturing. You need to have a tech transfer process. You need to have a scale-up process. You need to have analytical equivalence. So it's not a trivial problem. So anybody starting today, I think it will take months to get on stream. So while we all want it to be done as fast as possible, there is a process involved, there's a complexity involved, and that cannot be cut short in the interest of safety of the population. And companies have started doing this, working with various companies to ramp up manufacturing, but it will take some time. Once we now have the green signal, I think it will take some time to ramp up domestic production. It will be several months before we can get the production of other vaccines up. We were lucky to have Serum Institute and Bharat Biotech early on in the pandemic. We will now have more choices and more supplies, but that will take some time.
All right. Well, that's the word coming in from the management of Dr. Reddy's Laboratories, and clearly it is a stock in focus. We have a lot of questions as to how the next phase of the vaccination rollout is going to take place, but perhaps this company is one of those that will be front and center in the fight against COVID-19. What kind of an impact would that have on its financials? And is it a stock that you should consider adding to your portfolio? Also, the other stock that is in focus is Cadila, because it is also looking for approval to manufacture and distribute or sell its vaccine against COVID-19. We're going to talk about both those stocks with the guests that we have on board today. We have Kunal Bothra as usual. We also have Rajesh Agarwal, who is Head of Research at AUM Capital. Welcome to both of you, gentlemen, and good morning to you. I'm going to start with you, Kunal. The two stocks that we mentioned, Dr. Reddy's buzzing in trade today. What is the outlook on the charts, and how does it stack up if you compare it to its peers?
Alex, morning everyone. Very interesting prospects for Dr. Reddy, at least on the charts. When you talk of it from a longer term view, the last 1 year has been extremely fruitful for this large cap name. In fact, when the pharma index sort of rallied in the mid of 2020, Dr. Reddy was one of the first or the few large cap names which was sort of the architect in terms of the rally for the entire sector, and it led the way from the front, rallying up from levels of 2,500, 3,000 levels to almost as much as 5,500. So it had more than doubled from those March 2020 lows. But then I think there's a very interesting pattern which I wanted to highlight for Dr. Reddy, which is there on the charts. As you can see, the top grid is the price, the lower grid is the RSI pattern. Now what I've marked is a momentum trend line for the RSI. So the moment the indicator, that's the RSI, breaks past about that momentum trend line, you see a spurt of anywhere closer to 10 to 15% on Dr. Reddy on a very short term kind of a time frame. So as you can see on the charts, on the very latest point, the RSI is on the verge of breaking out of that momentum trend line. If that happens, you can expect Dr. Reddy to break past above its previous high of 5,500 and give almost a standard kind of a return of 10% in a matter of few trading sessions. So this is something to watch out for, specifically from a short term view.
At least in the short term, are supportive. Coming to you on this one, Rajesh, this is specifically on the fundamentals. Now, if you talk about the companies that stand to benefit from the expansion of the vaccination rollout, assuming that states like Maharashtra that are desperately in need of more vaccines strike deals with the likes of Dr. Reddy's, assuming the approval comes in for Cadila, how much should the investor pay attention to this in isolation?
Morning, Alex. I think this is a big news not only for pharma companies but the country as a whole, which has been suffering due to the pandemic and cases going above 250,000 per day. And it was a news of relief that came yesterday evening, and I think a lot of companies would be benefited in the times to come. Like the names of you have Dr. Reddy, Cadila, Wockhardt, and Pfizer's. These kind of companies are going to definitely be benefited. But the thing is, there are two things. One, it's not that tomorrow itself the rollout will happen. It will take some time because the things are to be put in place, technology has to be transferred, logistics has to be defined, and the main point is the pricing. The pricing has not been declared as yet, and the pricing would define how the numbers are going to be added to the individual company's number. Now, coming to individual companies, I think there are a lot of companies that, despite all those run-up, they are trading at quite good valuation, like Dr. Reddy, as we were discussing. It has run up quite a lot in the last 1 quarter or so. You have seen almost price doubling, but still we see a lot of scope. Maybe 5,500 would be a good level to watch out for. But I would say wait for some dips to accumulate this stock. On valuation parameters, we find Aurobindo to be on a very safer side, Cadila to be a better player, even Wockhardt can be bought at these levels.
Rajesh, coming back to you on this one, now you mentioned valuations and you mentioned the recent past, these stocks have actually seen a bit of a rally. What, according to you, is the key determining factor and what levels are you looking at for the earnings performance for Dr. Reddy's Laboratories that will justify the valuations?
Dr. Reddy's, one, it's going to be benefited by this vaccination. Maybe if it takes 2-3 months, that not in this quarter, maybe in the next quarter, the numbers will be added. That's a definite at this point of time. Apart from that, if you look, US market is doing well. The hard portfolio which they have bought is going to add to the numbers. And they have a lot of US FDA approvals and approval that is going to help this company in the long run. And if you look at the past performance, it has performed in the last 1 quarter or so where the price has doubled, but before that it was not performing at all. And it's still trading at a discount to its peer group valuation. If you look at Dr. Reddy's P, it's trading at around 28-30 times forward earnings, whereas on the contrary, the other bigger names are trading at 50 plus forward earnings. So I think there is a valuation gap. There is quite a good portfolio, and added to that, this vaccination thing. This is going to help Dr. Reddy's posting good numbers, maybe from next quarter onwards. So I would say any dip should be taken as an opportunity to add to this portfolio. We have a medium-term target of 5,500 at this point of time. That can be revised after once we get clarity on the pricing part and all those things.
Fair enough. Definitely some questions, Rajesh, that have to yet be answered. I'm going to start, Kunal, with the high risk and low risk ideas. I'm going to request both of you to keep your answers a little short because of the paucity of time. Let's start with you, Kunal.
So first one is about Balakrishna Industries. I think it's a very strong and a classical breakout for the stock. Price volume breakout, those typical characteristics which we look out for in terms of technicals. So the stock seems to have all those formations. Would suggest a buy on Balakrishna Industries for a target of 1800. Stop loss could be kept at 1690. The second is about MCX. Now, a couple of days back, I had mentioned that how gold has bottomed out and seems to be on a strong footing. Many of these gold-related stocks should move up higher. The risk reward is also in favorable. So MCX is a buy. Would expect at least a 10% rally further from current levels. So targets of 1700 and stop loss to be kept at 1450.
All right, those are Kunal's high risk and low risk ideas for the viewers. Good morning, Rajesh. And what are your high risk and low risk ideas for our viewers today?
Pharma being a flavor of the day, I think I should give one pharma stock, and that's Shelpa Medicare. That has done very badly in the last 2 quarters or so after that US FDA directives and all. But I think the portfolio of this company is global. It's a niche API player. They're doing well in oncology and non-oncology department. They have reduced their debt. And the best part is trading at a very low valuation, P of around 12-13 forward earnings. So I think Shelpa Medicare can be bought with a medium-term target of $500 rupees. And the other one would be a mid-cap IT company, that's Intellect Design. Second half is going to see very good traction on deal fronts, where there are 3 out of 12 products are in the number 1 category. AMC revenue is going great. It's increasing by 15 to 17% per quarter. Cloud is contributing too well. And I think this company is going to do very well in the coming quarters, looking at the management's focus on margins and cash flows. I think maybe a medium-term target of 825 rupees would be a reasonable target for this company.
Right, and those are the high risk and low risk ideas coming from Rajesh as well for us. All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But when we come back, we'll be back with your query segment. So make sure you've logged into our social media platform, be it Twitter, Facebook or YouTube, and we will take all your queries live. So after this break, we'll be back with the query segment.
Welcome back, and to all of you joining in on social media, welcome to you. Thank you so much for tuning in. Don't forget, you can ask all of your queries live and we'll try and take as many of them as possible. The first question is coming in from YouTube. We've got Mahesh Vaidyanathan, who is the earliest of the early birds, and he's got a question on Abbott India. If we can pull up that chart, it's currently trading below his buy price. He bought at levels of 15,000. And he intends to hold for the next 5 years. So, Rajesh, I'm coming to you on this because he's got a thesis on this. And that thesis is that nutrition market has huge potential. Some of Abbott's products are really popular. And this stock has stayed low due to lower than expected results. So, should he hold on for the duration that he's talking about, which is 5 years?
Despite the fact that the numbers were not that good in the last quarter, but I still feel that the fundamentals are quite good of this company with the kind of promoter pedigree, the kind of balance sheet it has. And if somebody has a long-term portfolio, maybe time horizon of 12 to 18 months, one can continue to hold this stock.
All right, our next query has come from Seiko Srinivas, and this is specifically for you, Kunal. He said that he's loved your Dr. Reddy's observation. He said beautiful observation on Dr. Reddy's, but he wants you to clarify on Kaplan Point Laboratories. He's bought about 500 shares in it. So how does Kaplan Point look on the chart?
I think it looks very attractive. The stock in last, I think 1 month from March ending lows from 400 to 500 has recovered quite well. Those typical observations which you look out for, that whether there's been a composition of good volume set up for Kaplan Point. So all those ingredients are coming back. Historically, when you look at it over the last 4-5 years as well, the stock has done reasonably well for itself. So on the longer term time frames, it's done pretty well. On the shorter term time frames, you're seeing some recovery on Kaplan Point, and I think all of those are very strong chart readings which you look out for. So I would suggest that if you're looking to buy, or if you've already bought, then I think it's a good strategy to hold on to the investments. I think with a time frame of 3 months approximately, a target of 600 to 625 should be a high probability trade for Kaplan Point.
Okay, the next query is seemingly a very well-researched question. We've got a question coming in from Santi on YouTube about a company called Kiri Industries. Now, this is a stock that is a small cap company. It's trading with gains of over 1% today. Market cap of just about 1,400 crore rupees. It's a company that manufactures dyes and intermediaries and chemicals. Now, his specific question, Rajesh, relates to court proceedings in Singapore, which and he's asking now that those court proceedings are over with. He's referring to a case against the company by Senda. What would the long-term outlook be? Should he buy into this company for the long term?
Yes, of course, he's right that the Singapore case is over and the overhang of that case is being removed from the company itself. But if you look at the numbers have not done anything, despite the fact that chemicals and dyes companies are doing well. Last quarter numbers were not that good. Top line was in fact negative, bottom line went up by around 10-12% only. It's trading at a low valuation of PE around 5-6, but still I think there are better choices available. Maybe a key industry or a Clariant or a Sudarshan Chemical would be a better buy in a chemical industry, chemical sector, rather than going for Kiri.
All right, our next query is coming from Shubh Mathur. He wants to know the view on Reliance Industries. He's bought the stock at around 1,991 rupees per share. He wants to know whether he should continue to hold on to the counter. Kunal, I'll come first to you. How is the chart for Reliance Industries looking at? 1,991 is the buying price. Should he continue to hold on to this Reliance Industries?
Well, I think you can hold on to the investments on Reliance Industries. Now it's a matter of time that, when the stock will come, come back strongly and cover up with this huge underperformance, in the last 6-7 months. I think from the September highs of 2,350 approximately for Reliance Industries, it's been underperforming significantly the benchmark Nifty. But, stocks like, Reliance have a tendency of, remaining underperforming from a medium-term perspective, but when they tend to cover up the underperformance, the rally in the in that kind of perspective tends to be more vicious. So I think in that aspect, you can hold on to Reliance Industries. Again, I said it's a matter of when will the stock cover up the underperformance and start to.
All right, that's the view on Reliance Industries. Let's go across now to a couple of questions which I want to club, Rajesh. Now, Manjunath is asking about Borosil Renewable for the long term, and you've got Radesh who's asking about Adani Green Energy till 2024. Seemingly, both of them want to play the renewable energy theme. Which, according to you, would be the perfect pick? Would one of these be a good pick, or would you look outside of this?
One is Adani Green, and what was the other one you said?
Borosil Renewable.
Okay. I would say stay away from both of them, because despite the fact that Adani Green is a strong quoting, the capacity is huge, but it has run up quite a lot. And the valuation on a higher side. So entering at this point of time won't be a prudent decision to make. Rather, I would say it may take a huge time of consolidation if it goes into consolidation. A better bet on valuation parameters, if you look at this point of time, would be in power sector, of course, would be CESC, which is trading at a very low valuation, or a Tata Power, which is again trading at a very low valuation, and they're moving into solar and EV and all those things. I think these two stocks in the power sector would be a better bet than going from those companies.
Rajesh, there's a next query coming in from Abhishek Kohli. He's saying that is Syngene International a good buy for the long term? Wants to know how is it placed in the CRAMS industry, and do you sense any tailwinds also in the CRAMS industry? So what would your advice be on Syngene International for Abhishek? Rajesh?
Yeah. I think it's a very good bet. The companies were doing very well. The product profile is good. And I think it's going to outperform other companies in the peer group. So definitely a buy. And if somebody wants to play safe on this also, then one can buy Biocon, where you have both of these. The Syngene is a subsidiary of Biocon, then you get the benefit of that, and the biological play, biologics that Biocon has. So one can buy both of them.
To be having a little bit of trouble with Kunal's line, so I'm going to come back to you, Rajesh, on the cement space. And there are quite a few names that are mentioned here, but I want to stick specifically with Ultratech Cement. And we've got Puneet Nanda who's got a question on it. Based on what you saw with ACC's results yesterday, quite the stellar performance, especially on the EBITDA margin front, do you anticipate that Ultratech will be one to watch out for on account of the kind of price increases we've seen over the past several months?
Definitely yes, Alex, because one, Ultratech has got the largest capacity in India. They are expanding capacity also. EBITDA per ton has come at a very reasonable numbers. The number last quarter has been very good, and we anticipate better numbers in at least 2-3 quarters to come. government focus in affordable housing and infrastructure is another benefit. And somebody, if he wants to play safe on Ultratech, I think one can go ahead and buy Grasim, which is a holding company for Ultratech, and you get a benefit of not only Ultratech but AB Capital and other things in Grasim also. So if one is a momentum player, then Ultratech would be a better bet, and if one is a medium to long-term investor, Grasim would be a better.
All right. Our next query is from Shanmuga Sundaram. He's saying he's holding Dixon Tech at 3,500 rupees per share. He wants to know whether he should continue to hold on to this particular counter. Kunal, welcome back. What's your view on Dixon Tech?
Stock exceptional chart, done phenomenally well post, the March 2020 recovery. The long-term prospects have been quite stable. In fact, the best part about the stock, at least I like that, is that it doesn't, go through too much of a volatility. So I think currently as well, the stock is just nearing above its 50-day moving average, which has been a good support zone for Dixon Technology. So I think if you're looking to buy specifically from a long-term view, these are good prices where you can look to invest and have a very similar kind of a strategy of buy on dips anytime the stock goes through a correction of 10 to 15% odd.
Okay, a stock that is trading weak, Kunal, of late, and this is specifically a question to you from Rajan Vittal on Eicher Motors. He's asking whether this is a good time to enter the stock for the long term. Now, of course, on the fundamentals, there are question marks over two-wheeler demand and two-wheeler currently what the supply is like and whether that can be absorbed. But on the charts, it's trading below all of its key moving averages. How does it look right now for the next, and he's asking, in fact, how long he should hold it for?
So I think it's a good question. Specifically on the auto stocks, Alex, I believe that they're nearing some sort of a short-term to medium-term bottom. So stocks like Eicher Motors, and there are so many stocks on the large cap space which are still trading very close to or either below their 200-day moving averages. But when you look at this in the context of the correction in the last 3 months, Eicher Motors specifically from 3,000, 3,100 has corrected towards 2,300. So it's a correction of more than 700 to 800 points on the stock, which is as much as 20-25%. Now, from a large cap perspective, a 20% to 25% correction should be a good starting point for you to enter because the risk rewards are in favor. Now, when the cycle will turn for the auto stock, I think it's just a matter of time. But starting to enter at the right point as well is also one part of your or major part of your investments or your trading positions. So I think at 2,300 levels for Eicher Motors, it's a good strategy for you to start buying at current levels and then wait for the cycle to turn and then you can average on highs rather than averaging on dips.
All right, our next query is coming in from KK. He's saying, please advise how Glenmark's proposed IPO of a subsidiary, and I believe he's talking about Glenmark Life Sciences, will improve the market price of Glenmark. Wants to know that by how much will it aid Glenmark's stock price. Rajesh, I'll come to you. What's your view on the IPO, the ARMS IPO of Glenmark, and how does it improve the matrix for Glenmark as well?
See, it's value unlocking for Glenmark in simple terms. If you say the numbers have been doing well, they're into research and all that's doing well. And this is going to be a value unlocking process because some of the holdings would still be there in Glenmark. And as far as the IPO is concerned, definitely, yes, the company is good. The numbers have been good. We have gone through the DRHP filed day before yesterday, and we found that the story was good. But a lot depends on the pricing factor, how the price is announced for the IPO. If it is very aggressive with price, then we will take a call. But at this point of time, I would just say that yes, the company is very good and it's going to add to the valuations of Glenmark because a lot of value unlocking will take place.
All right, we've got a question on Apollo Hospitals, and it is trading very strong today, as much as 4.5% gains for the stock. So Kunal, the question is for you, and I'm not really sure how to ask this because I think I will restrict myself to asking what is the intraday view on the counter, because we got a viewer who has taken a position. I do not know what the position is. He's asking whether he should square it off. But since I don't know what the position is, can I just ask you to give us an intraday view?
So in fact, Alex, yesterday on the BNSN show, I had given a buy call on Apollo Hospital because I was anticipating a very strong breakout. It's a swing breakout for Apollo Hospital, over the last 1.5 months. So specifically from the March, beginning, or the month of the March beginning, the stock was consolidating, and yesterday it managed to show some first signals of a breakout where you saw price, volume, all those characteristics coming up strongly. If it's specifically towards intraday, then I believe that at 3,300, which I had given a target yesterday, the stock has hit those target levels, so you can square off your intraday positions. But if you're in from a swing trading perspective and you want to hold on for say another couple of weeks, then I believe you can hold on to the investments, keep a stop loss or a trailing stop loss of 3150, which could be your cost price on Apollo Hospital, and a target to be kept at approximately 3,450.
All right, that's Kunal's view coming in Apollo Hospitals. Moving on, you have Aniket Gandhi who's asking whether Power Grid or Tata Power, which of this looks better over the longer term? Rajesh, what's your view? Power Grid or Tata Power, which one is better off in the longer term?
It's a difficult choice because valuations are attractive for both of the counters. In Power Grid, you get good dividend yield. It's a government company, and the best part is there's no debt in that. It's a great company, as we all know, and they get a commission on what the power is transmitted. So for a long-term view, it's also good. And as we come to Tata Power, as I discussed earlier on the show also, that Tata Power can be bought for a longer-term horizon because of various reasons, like that the power division is doing well, they're going to do solar, they're going to be EV. So I think Tata Power is also a very good bet. So both of them can be bought at the current levels for maybe upside of 20-25% in the next 1 year.
Coming back to you, Rajesh, on this same counter, okay, we've got Sheffer who's asking about Apollo Hospitals on the fundamentals. Now, if I remember correctly, at the onset of the pandemic, this stock was trading quite weak, and in fact, over the course of the last year, we've seen it gain quite a bit of ground. What is the view on the fundamentals?
See, Alex, I have recommended this stock a number of times in buy now, sell now from the last so many months, and I still am very bullish on this. With around 70 hospitals, with more than 10,000 beds, 3,100 pharmacies, this company is doing very well. The focus is on debt reduction. Tier 2, Tier 3 city hospitals are doing very well, and with the kind of health issues we are witnessing, I think corporate hospitals are going to do well. And not to forget, the kind of things going on the Mediclaim front, people going for Mediclaim, and also that's the kind of upside we can witness in this. Yes, there are some restriction on medical tourism which used to come from Bangladesh and neighboring countries for the time being, but I think that's just a matter of time. Apollo Hospital can be a very good bet. It has corrected from 3,600 odd levels. Maybe a medium-term target of 35 to 3,600 is quite possible. Longer-term target can be much higher.
Right, our next query is coming in from Sahil Mathur. He wants to know that does India Mart look good for entering right now for a long-term perspective? Kunal, what's your view on India Mart? Does it look good to enter at these levels?
So again, a stock which had done exceptionally well from 9,200, it's corrected back towards 7,700 kind of levels where it's currently trading. So again, a reasonable correction for someone to enter. But then again, the stock needs to go through, I would say, since one round of correction on prices, because the volumes have somehow gone through a bit of a low. So I would sense that maybe a drop of another 10% to 12% could be in the offing for India Mart. But if you have a strategy, if you have a time frame of medium term to long term, then I believe you can start at current levels and then add if the stock corrects to closer to 7,000 levels.
The next question, in fact, incidentally, is something that we spoke about not too long back on the show in a thematic conversation on pharma. Abhishek Kohli is asking about Aurobindo Pharma, and Kunal did speak about this counter in the context of its peers, but he's asking Abhishek about the valuation picture vis-a-vis its peers, Rajesh. So how does it stack up, and would you say that it's still attractive to buy?
It's still attractive. I believe that this is one of the stock which is in the lowest valuation chain of the entire pharma space. If you look at the numbers have been quite strong. Formulation revenues have gone up. API is doing well. They have announced that there were news in last couple of days that they are going to announce some demerger, and US and Europe both are doing well. If you look at valuation, FY22 P is around 12-13 odd times, and that's one of the cheapest stock available in pharma space, I would say. One can go long. Yes, it has run up quite a lot in the recent past. It may consolidate, but it's a good stock on valuation parameters. And somebody has a time horizon of 9 to 12 months, 25-30% upside from on the current market price is quite possible.
Right, and this one would be our last query for the day, and this one is from Sandeep Deshpande saying, what's the view on Adani Port? Rajesh, Adani Group stocks have been on fire for a long time right now, and specifically, what's your view coming in on Adani Ports?
Look at the capacity, it's one of the largest ports company in India, I would say, and the kind of focus on logistics and other things, the company is going to do well, no doubt on that. The Mahindra and Navashkova ports are doing well. But if you look at the valuations are on a very higher side, and it would be quite a risk to enter at these levels. Somebody holding the stock might continue to hold, but new entries should not be taken at this point of time. Maybe some correction would be a better opportunity.
All right, and that was our last query for the day. Thank you, Kunal, as well as Rajesh, for waiting by, resolving all the viewer queries, talking about Dr. Reddy's, as well as giving your high risk and low risk ideas. All right, on that note, we are out of time for the query segment, but we'll take a break on this edition of Buy Now, Sell Now. Stay tuned, more on the other side. Don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now. Let's focus in on earnings then. And ACC reported quite the stellar performance in the first quarter of 2021. In fact, it beat analyst estimates. It beat our own poll expectations. And Vivek Iyer has done all the number crunching, and he's here to tell you exactly what happened during that quarter for ACC. Vivek?
Well, watch out for the entire cement sector, given the fact that ACC has come out with the results, and ACC results, while select parameters like the top line as well as the volumes are in line with what the market was anticipating, what has been a very positive surprise has been the fact that the company has delivered a stellar EBITDA, a stellar EBITDA per ton, and stellar EBITDA margins. These parameters, the company has managed to beat street estimates by a significantly wide margin. Talking about the revenues have come in close to 4,200 crore, a big jump QOQ, mainly helped by the fact that when you're talking about volumes jumped up almost 21% on a year-on-year basis. But remember, keep in mind the fact that on a year-on-year basis, the base effect of not having or having very low offtake in the year gone by was something that market participants have to keep in mind. Despite that, when you're talking about the core EBITDA has come in at close to 860 crore, a significant beat to the ET Now poll and even the consensus estimates. When you're talking about the EBITDA margins, 20.4% EBITDA margin, a significant jump, almost over 250 basis point jump, and this is something that clearly indicates that the company's MSA plan with Abuja Cement is clearly favoring both of the companies, and both of the companies are seeing significant cost saving initiatives helping their core EBITDA margins. When you're talking about the profitability coming in at close to 563 crore, marginally above what the street was anticipating, mainly aided by the core EBITDA performance. So overall, what the company is saying, that the demand environment at this point of time is strong, given the fact that the company has seen increased spending by the government, also strong focus on infrastructure development. Company at this point of time is having a cautious yet positive outlook as far as cement demand going ahead is concerned.
Right, thank you, Vivek, for taking us through the review of ACC's Q1 earnings. Definitely, the stock is seeing good jump in today's trading session. But apart from that, you have ICICI Prudential. That particular counter is up 11%. That's most in a year. And Poonam is here to tell us why exactly is ICICI Prudential surging. Poonam, how are the numbers?
Well, we are seeing a fairly strong performance coming in from ICICI Pru Life Insurance. Most of the brokerages maintain their positive stance, and also the life insurer has reiterated the guidance to double the VNB between FY19 to 23. APE grew 27% at a strong growth in fourth quarter, led by over 100% growth in the non-linked savings business, while growth in the linked savings business has turned positive after being in the red for most of FY21. The share of ULIP has declined to 48%, while the share of the protection stood at 16.2%. Management also expects continued business growth momentum led by non-linked savings business. VNB margins have moderated slightly to 23.6% on account of the protection mix. The same has been supported by non-linked segments. In fact, the persistency has improved across most of the products as well. Management also states that they have over 300 crore of provisions to take care of COVID-related hit. That should be even sufficient for FY22. Morgan Stanley has an overweight stance of the target of over 600. They also mentioned that it's been good quarter, good numbers, strong APE growth, as well as good FY22 guidance. And overall, they do have a fairly positive stance on ICICI Pru Life Insurance.
All right, thanks so much for that, Poonam. Reasonably strong new business premium growth for the company, and the question really is, will that continue? In fact, we spoke to the management, the managing director and chief executive officer of the company, that is NS Kannan, and I tried to understand whether the second wave of the pandemic is going to have any kind of impact on the company's earnings going forward. Here's what he said.
Yeah, yes, this is the pandemic which we don't have full experience even now, because we've been about a year into the pandemic, and the second wave, as you rightly said, we have seen the resurgence across the country. So as a responsible life insurance company, robust company over a long period, we have to look at primarily strengthening our balance sheet and ensuring that claims experience is handled quite well. So that has been our primary focus. So I'll talk about the claims part of it first, before talking about the business impact of COVID. On the claims so far, we have had a net of reinsurance claims of 260 crore, and which we have paid out during the year. We thought that given the fact that maybe some of the claims have not yet been reported, because typically there is a delay, though the delay has come down over a period of time, there's a delay in reporting claims. So we thought we should make an additional provision of about 30 crores for claims that may have happened, and the event which may have happened, but the claims have not been received by us. That additional provision we have taken. Apart from that, considering that we had about 260 crores in the last financial year, we thought we should strengthen our provisions towards COVID. So another 300 crores we have added by way of provision. So as of today, we are holding 330 crores of provision for expected claims that we think will comfortably take care of one more year of such claims. So that is one part of the story. The second part, you talked about the business impact. April beginning for 10-15 days, we saw a good business compared to last year. And we believe that, even with the COVID second wave emerging, I don't think there will be any big issue regarding our VNB journey or APE journey. We say that because this time around, I don't think the lock-in will be as hard a lockdown. Lockdown will be as hard a lockdown as we have seen in the last year. Second, there is tremendous adaptability of the system. Customers are moving to digital. Distributors are moving to digital. So there is more adaptability today and preparedness today, if you will, on handling this COVID situation. So that is a second big factor I see. And third, with the vaccination drive getting momentum, I do feel that things would get contained over a period of time. So all in all, yes, customers will move to digital, to answer your question, which has already started happening. We have also instituted several collaboration tools for the distributors so that on a remote basis, things can be transacted. The regulator on their part have given a lot of approvals to do business remotely, including removal of wet signatures. And if you have tracked the
Now shifting focus from earnings reported to earnings expected, and Nestle is all set to report its Q1 earnings today. Vinny is here to take us through what we're expecting from Nestle. Vinny, what are the polls indicating for Nestle Q1?
So Nestle is the first FMCG company which has been posting its quarter Jan to March quarter numbers. For Nestle, it's Q1 current year 20 numbers. Let's have a quick look at what we're expecting in terms of numbers. Obviously, for FMCG companies and most companies we have seen a low base last time as well. When we had seen the lockdown start and begin in March. So, there is a low base that we're seeing over there. So now in terms of revenues, we're expecting the revenues to grow by around 8.9% and come in at 3,621 crores. While in terms of the profits of the company, that's the bottom line, we're expecting a 12.9% growth on a year-on-year basis. In terms of margins, we're expecting around a 70 basis point expansion in margins. This is the EBITDA margins which I'm talking about, and we're expecting them to come at 24.6% versus 23.9%. Nestle normally generally does not give a volume growth number, but the inferred volume growth, what we'll be expecting at will be around 8 to 9% volume growth for the company. Obviously, strong growth in prepared dishes and improvement in out-of-home consumption portfolio is something that has aided the company in this Jan to March quarter as well. Sequentially, gross margins actually will be expanding this time around due to the lower milk prices YOY which we saw in this quarter, but sequentially they have seen an increase. So sequentially the milk prices have gone up, and that could, there's an inflation in raw materials. Sequentially gross margins will contract due to the pressure increasing on raw material prices. Obviously with the raw material prices increasing, we expect some impact on the EBITDA margins, but the company is taking cost optimization measures which is aiding the EBITDA margins. And we expect, in terms of company wise, we expect the focus on new launches to resume, as well as rural also, which they've been focusing on. So let's keep an eye out on there. Other factors to watch out for will be in-home consumption trends. Any commentary over there, commentary on material cost outlook, what are they seeing over there, and what are the new demand trends, any supply challenges, what is the rural trend shaping up given the rise in the second wave of coronavirus cases, that we've started seeing coming in from April and second half of March. So let's keep an eye out on that.
All right, let's in fact take a look at what the latest is on the vaccination front. PM Narendra Modi is set to meet the top vaccine manufacturers in the country as the government has approved vaccines for everyone above the age of 18 years starting the 1st of May. Ruchi is joining us with more details on this. Ruchi?
Prime Minister Modi will be meeting vaccine manufacturers today via a video conference at 6 p.m. This is, of course, coming in light of the surge in COVID cases that we are seeing and the regular meetings that the Prime Minister has been holding. Remember, he has been reviewing the situation closely. Yesterday, he met with the top doctors as well as the pharma companies, and today he is meeting vaccine manufacturers. Also coming in light after the government has expanded the third phase of the vaccination drive from the 1st of May, under which everyone who is over 18 years of age will be eligible. The government has also given the funds for incentivizing the vaccine manufacturers to ramp up their capacity and will be procuring 50% of the vaccines from them for their vaccination program, and the other 50% can be procured by the states and will be left for the open markets. This is a significant development coming in at a time that India has been struggling with the COVID wave. And having said that, we have vaccinated over 12 crore people. This is significantly going to help us get a rise in the number of, increasing the number of vaccinations as well. We're also given to understand that the Prime Minister today is going to focus on asking these companies, vaccine manufacturers, to ramp up their capacity significantly, even though we will be able to import certain foreign vaccines as well. We are banking heavily on the vaccines from Serum Institute as well as Bharat Biotech. Bharat Biotech has already been given a grant of 65 crores. Besides that, there will be technology transfer as well that will take place between these companies. Certain government PSUs will also be roped in, and they will also be used to enhance the vaccine capacity significantly. So this is an important meeting today. We'll of course keep you abreast of all the developments from here.
All right, Ruchi, thank you for getting us that latest update, and all eyes on the crucial meeting where the Prime Minister will be meeting the vaccine makers. And with that, we are out of time on this edition of Buy Now, Sell Now. Thank you for watching.